story this morning. The Prime Minister, Justin Trudeau, saying that U.S. tariffs on Canadian goods will now be delayed for a month after a last-minute agreement that will see Canada join the U.S. in creating a new strike force to fight drug trafficking and organized crime. Now, remember, if you were watching the markets yesterday, for most of the session, there was plenty of uncertainty. We only saw a bit of relief in the markets after there was an indication that Mexico and the United States may be able to avert a trade war for now. Looking at the Canadian dollar, it is stronger against the greenback today. That certainly wasn't the case yesterday morning, but there is still a cautious tone surrounding the currency market and the outlook for the Canadian economy. Now, when it comes to the TSX performance yesterday, at one point we were looking at a very notable decline. At the end of the trading day, we were still down more than 1%, but that was more muted compared to where we started the day. And keep in mind, because the TSX has had some good momentum recently, we're still positive for the year. Wanted to get some perspective, though, on the story of the markets, and joining us in studio to talk a little bit more about that is longtime guest Brooke Thackery. Brooke, great to see you. Thank you very much for joining us in a busy week here.
Thank you very much for having me on the show.
So let's talk about what yesterday felt like from your perspective. What were people asking you about? Obviously, things seem to have a positive end to the day, but a lot of turmoil in between.
Yeah, it was one of those days where it was really news-driven, where people were really concerned. They were hearing different rumors taking place about the tariffs and Mexico, and is Canada going to be different? It also, is Trump trying to get hold of the Canadian banks? I just saw a whole bunch of different rumors. And you know, this really comes back to that you can't really panic in the moment because you would be battered around all over the place.
Yeah. And is that something, do you think, that we have to get used to, the Trump volatility? I mean, if the U.S. president likes the leverage that he can potentially have against other nations through the threat of tariffs, would he want to give up that possibility? I mean, it's been pushed out now, I guess, for a month, but, you know, maybe he just keeps pushing it out. I don't know.
Yeah, you know what? I think this isn't over. I don't think this is, hey, you did a good job in 30 days. You know, great. We won't have tariffs. I think this is just a pause here. And maybe we end up with tariffs that aren't 25%. Maybe they're 15, maybe they're 10, maybe they're 5. I think there's going to be tariffs down the road at some point. Trump has basically also said on the other side that he wants to use tariffs as a revenue-generating tool. He's even said things like, I want to get rid of income tax. And the only way you can do that is by using tariffs for external revenue. I don't know if that will happen, of course, but we're seeing this back and forth. I don't think this is finished. I think there is going to be more volatility in the markets, and there's not going to be a lot of uncertainty around the tariffs on a go-forward basis. This isn't done yet.
What does volatility mean? I mean, stocks and bonds and currencies, they go up and down every day. But what kind of volatility metrics are you watching, and why do they matter?
Well, first of all, volatility can sometimes indicate a direction change in the market. If you start to see the VIX, which is implied volatility, and that's very often how traders measure it, starts to go higher, that means that fear is really increasing in the market. And if we take a look at the VIX there yesterday, we saw it spike in the morning up a little bit. We're still below that 20 level, though, and it did start to come back down later on in the day. And it has been fairly low for, well, even last year overall. We have seen some spikes, but we really want to watch this. I think the volatility will increase, and that's going to shake a lot of investors out. You're going to see a lot of fear being driven into the markets, in the equity market and also the fixed income market as well.
You know, it was interesting yesterday because we had some immediate targets, stocks that seem to be associated with industries that would be impacted by tariffs. It felt like on day one, like the automakers, a lot of the auto parts companies in Canada were under pressure. But we also saw investors shifting away from tech. And maybe part of that was the unknowns associated with this geopolitical boondoggle. But, you know, the other part is it was a risk-off start to the day, and people were shedding some of those big performers. If there's more volatility, what does that mean for the biggest movers over the last year or two, do you think?
Well, let's take a look at technology. Excuse me. If you use an ETF like XLK as an example, the technology sector has been market performed for the last year and a half. And we're starting to see this downward trend for technology. We're so used to seeing technology outperform, but it's really starting to struggle here a little bit. Obviously, we had DeepSeek come in the previous week, and that really impacted the market. Took a little bit of speculative taste out of the investors for the technology sector. So if we see the technology sector start to fade here a little bit, then that actually is probably not going to be good for the market overall. So I think what we saw yesterday's move, I think that was a little bit of that risk off taking place, and people were saying, whoa, maybe I should get out of technology here. It's not really doing as well as it should be, and this is a risk on trade I don't want to be in.
Maybe if I could take the flip side, you're right. It was a week ago where all of a sudden, for a moment, people called into question whether or not the AI spending boom was going to be as robust as previously thought because DeepSeek was able to make a chat GPT for a fraction of the price. Then a week later, we're on the doorstep of tariffs, and the markets are trying to price that in. And in both cases, we did see a lot of selling pressure. There's no doubt about it. But, for people who are wondering if there's a correction or a crash in the cards, could you make the argument that this bull market is still navigating well through some pretty dramatic storylines in just a couple of weeks?
Oh, absolutely. I mean, there's no indication that the market's going to crash here. I mean, you can't say this is an indication of that. The uncertainty does increase anxiety for investors, and the markets tend not to do as well in uncertain environments. And this is just adding more uncertainty in all sectors of the market. And perhaps the investors have pulled back a little bit on the technology sector. So you saw that response once again on that risk-off trade.
All right. Well, Brooke, we're going to be speaking to you through the hour, and I know you've been watching what the tariff story could mean for the price of gold, which has been